Welcome to Biz-Bite.ai, and welcome back to the Deep Dive.
Great to be here.
You've given us a really interesting set of sources today, asking us to really unpack what's happening in Hong Kong right now.
That's right. The future prospects, the current situation.
And specifically, you wanted us to look at it through the eyes of two, well, quite significant figures, wouldn't you say?
Definitely. Very different perspectives.
Yeah.
We've got David Webb, the veteran activist investor, and then Stephen Roach, the well-known economist.
Yeah, exactly. And we have their recent comments, interviews, written pieces right here. So our mission today is pretty clear. Let's dive into this material, try to understand what they're really saying about Hong Kong economically, politically, structurally.
And pull out those key insights, right? The nuances that maybe get lost in the headlines.
Precisely. It feels like a really timely moment for this exploration, too.
It really does. Hong Kong, it's such a complex story, isn't it? Always evolving. And you absolutely need these different viewpoints to even start to get a handle on it.
For sure. You've got Webb, who's been there for decades, really inside the mechanics of the market.
And then Roach, coming at it with that broader macroeconomic view, and of course his previous big statements about the city. It makes for a fascinating contrast.
Okay, let's dig in then. Let's start with David Webb. Anyone who follows the Hong Kong market or corporate governance issues knows his name.
Oh yeah, legendary, longtime British resident there, hugely influential activist investor, and the driving force behind website.
Which has been, it's fair to say, a bit of a thorn in the side of quite a few companies and officials over the years.
All in the name of transparency and better governance, though. That's always been his focus.
And the context for his latest remarks, as these sources really highlight, is, well, it's quite profound personally.
It is. David Webb is publicly battling late-stage cancer. He's been incredibly open about having limited time left.
And he recently held that event at the Foreign Correspondents Club, which was widely seen as a sort of public farewell.
That personal reality, it definitely adds a layer of significance to what he's saying now about the city he's called home for so long.
Absolutely. And yet, despite that huge personal challenge, his core message about Hong Kong, reading through these sources, is actually remarkably resilient.
It really is. He believes, and he puts it very simply, that Hong Kong will never be dead.
That's a powerful statement, especially with some of the narratives flying around. So why does he believe that? What's the foundation for that resilience, according to him?
Well, digging into his comments, it really comes back to what he sees as Hong Kong's fundamental DNA, its core identity.
Okay.
He keeps mentioning its inherent free market economic vitality, that and its uniquely low tax rate.
Those are the bedrock advantages.
Exactly. In his view, these are the deep-seated strengths that make Hong Kong different globally. And they're the source of its resilience, no matter what turbulence it's going through.
So it's about that underlying structure, not just the current mood or political climate.
Right. And he's also been quite open about the future of website itself. Given his health, he's planning a staged shutdown.
But there's an important detail in the sources, isn't there, about hoping someone takes over part of the work.
Yes. He hopes a statutory body, he couldn't name which one, but said one was interested will take over parts of his work, specifically keeping that crucial public data he's compiled available.
Which just shows how vital he thinks that transparency is for the city.
Absolutely. And alongside these, public discussions about his work's future, the sources also mention some practical steps he's taking personally with his own financial holdings.
Yes, the changes to his interest in controlled corporations.
Yeah.
These are the vehicles he uses to hold shares.
That's it. The HKX data shows he's added his wife's name, Karen Ann Webb, to two of the key holding companies, Preferable Situation Assets Limited and Member One Limited.
So the shares within those are now jointly held.
Effectively, yes. And the sources say this affects his holdings in 22 different listed companies. They give examples like Sunning Vision, Raymondine, Bauhaus NTL.
And there was a note about him recently buying more Bauhaus shares, too.
Right. It's a practical step, obviously, given the circumstances, but it also publicly documents just how wide-ranging his investments have been.
Okay. So beyond the personal and the site's future, he's still pushing on policy advocacy, isn't he?
Oh, definitely. He's very vocal, the sources show, about Hong Kong needing to double down on its free port status, really promote itself as a duty-free hub.
He sees that as particularly relevant now.
Yeah, especially with the U.S.-China trade friction. He thinks it's a key strategic advantage for Hong Kong to emphasize right now.
Makes sense. Focus on what makes Hong Kong unique in this tricky environment. But he's certainly not painting a rosy picture of everything. He has some sharp critiques.
Far from it. The sources detail some really pointed criticisms. He feels Hong Kong's economic policy just isn't as free as it used to be.
How so?
He actually uses the phrase mainland-style central planning approach creeping in. That's how he sees the government's direction.
That's a strong claim.
It is. And he doesn't hold back on the city's financial leadership either. He's quoted saying there's been a string of financial secretaries who, in his view, just don't understand economics.
Wow. He calls that a basic foundational problem.
Pretty much. And he also aims criticism at the financial markets, specifically HKEX, the stock exchange.
What's his issue there?
He argues the exchange and the government just haven't worked hard enough or smartly enough to attract listings from other countries in the region, beyond mainland China.
He thinks that's left Hong Kong too dependent.
Massively. He points out mainland companies now make up something like 80% of the total market value. He clearly believes Hong Kong could be and should be a much broader regional hub for raising capital.
Okay, so that's the economic critique. What about the political side?
While he describes the current climate as an authoritarian mode, significantly less democracy than in the past.
And he mentions concerns about self-censorship.
Yes, that's a key point for him in these sources, the issue of unclear red lines. He feels this ambiguity makes opinion writers censor themselves excessively.
Even if criticizing policy might still be okay.
Right. He thinks policy criticism is generally still within bounds, but the lack of clarity around political topics has had a definite chilling effect on free expression overall. He sees that as damaging.
Well, he notes that debate on political reform itself has basically just stopped.
Yeah, ground to a halt. And interestingly, for an activist himself, he suggests maybe activists should keep a lower profile on the democracy front for the moment. Focus on policy commentary instead, where there's perhaps more space.
That's quite pragmatic.
Yeah.
And reflecting his concerns about transparency, there's that detail about websites archive.
Yes, his decision to remove the pre-2020 archive, keeping only recent years online. He explicitly said that goes against transparency and doesn't help public confidence in government scrutiny. Coming from him, that's powerful.
So you've got these sharp critiques of the present, politically and economically. And yet, his long-term outlook is still optimistic.
Remarkably so. He looks ahead to 2047, the end of the 50-year one country, two systems guarantee. And he holds on to this belief that by then, China itself, and therefore Hong Kong, will have to open up more, become more democratically accountable.
It's a kind of fundamental faith, maybe.
Perhaps in history's direction or just in Hong Kong's enduring spirit. And when you look at his motivation, why he spent decades doing this activism,
It wasn't about the money.
not at all. The sources are clear. He finds the activism far more rewarding. He sees his contributions like on company law changes, shareholder rights as being for the public good.
And he has that life philosophy.
Yeah, Carpe Diem, seize the day, and Gaia, that great Cantonese phrase, add oil, keep going, give it your all.
Yeah.
He says he's glad his work's appreciated and, wants to feel he did his best.
A really quite profound perspective.
You okay?
Okay, let's shift gears now. Let's pivot to Stephen Roach, American economist, loads of experience in Asia, former chairman of Morgan Stanley Asia, now at Yale.
Roach is fascinating because, he made that very big, very public call on Hong Kong not that long ago.
Ah, yes, the famous opinion piece. It pains me to say Hong Kong is over. That title definitely got attention.
Huge attention sparked massive debate. And his reasoning back then, his bleak view, rested on what he called his three legs to the stool.
Right, can you remind us what those were?
Sure. First, domestic governance problems within Hong Kong. Second, its tight economic link to a struggling Chinese economy. And third, his prediction that Hong Kong would get caught in the crossfire of the US-China conflict.
Okay, caught being the key word there. Because this is where the sources you provided show a really significant, maybe even surprising, revision in his thinking.
Exactly. He now explicitly says he'd changed that word caught. He actually believes, counterintuitively perhaps, that Hong Kong has benefited from the US-China crossfire.
Benefited? How? That's the unexpected twist.
Well, he points to the evidence he sees in the market, the Hang Seng Index, for instance. He noted it saw solid gains, up around 50% from the start of the year when he was speaking in early June 2025.
That's a big jump.
It is. And maybe even more striking, he says Hong Kong has rocketed to the top of the global fundraising table recently. Big IPOs.
Like the CATL listing.
Yeah.
The battery giant.
Exactly. That's mentioned as a prime example in the sources. And the potential Alibaba Cloud IPO is another sign he points to.
Okay, so how does he explain this? How does conflict lead to benefit in this case?
His reasoning is that what he calls a sell America trade has become a kind of global mantra, particularly in Asia.
Meaning companies are looking elsewhere.
Pretty much. He argues this climate has pushed Chinese and other Asian firms to prefer listing in Hong Kong. Why? Because they see the U.S. capital market environment as inhospitable.
So political tensions in the U.S. are driving business to Hong Kong.
That's his argument. He even suggests that things like potential U.S. moves to delist Chinese companies could actually accelerate this trend, pushing even more listings towards Hong Kong.
Wow, that's quite the shift from Hong Kong is over to Hong Kong is benefiting, at least on this specific aspect.
Yes, and that's the crucial point, the scope of his revision. The sources are really clear. He's not saying his original concerns have vanished.
He still holds on to the other two legs of the stool.
Very much so. He maintains the other two legs are still very much intact and are significant worries for him.
So the domestic governance issues.
Still a very disconcerting negative, in his words. He specifically cites the fact that more than half the foreign judges have resigned from the High Court of Appeal since he wrote his original piece. He points to their critical comments about the rule of law as ongoing evidence of this problem.
Okay, and the second leg. The link to China's economy?
Still a major concern. He highlights that statistic from the sources, Hong Kong retail sales down for the 14th consecutive month year over year.
Ouch.
Yeah. And given the headwinds China's own economy is facing, he finds it hard to imagine Hong Kong's economy staging a strong, independent recovery while it's so closely tied to that weaker environment.
So the market surge has surprised him, driven by this specific geopolitical factor. But the underlying worries about governance and the structural economic ties to China, they haven't gone away for him.
Not at all. He seems to see Hong Kong's current role primarily as a bridge, a necessary conduit for China and other global players to access capital through Hong Kong, mainly because other markets, particularly the U.S., seem less welcoming right now.
And the IPOs reflect that.
He notes they are dominated by Chinese and Asian firms. It's not necessarily Western companies flocking back in force. It's more about serving that specific need in the current global climate.
The sources also mentioned he touched briefly on broader U.S.-China policy.
Just a couple of points. He thought Trump's idea of cutting foreign student numbers was terrible for cross-cultural understanding, and he offered a fairly pragmatic take on the U.S. stance towards China.
Which was?
Basically that while the style might change depending on who's president, the underlying anti-China sentiment in Washington is strong and bipartisan. So he expects tough U.S. policies to stick around for the foreseeable future. He pointed out, for instance, that Biden kept Trump's tariffs.
Okay, so bringing these two perspectives together, you really do have different lenses on the same city, don't you? Webb, the long-term insider focused on fundamentals. Roach, the external macro observer reacting to global forces and market shifts.
Absolutely. And it's not about saying one is right and one is wrong. They're focusing on different things, different time horizons, perhaps.
Webb's view feels grounded in Hong Kong's enduring why. You know, that free market core, the low taxes, its history of bouncing back. He sees those fundamentals providing resilience, even as he slams current policies.
Right. Whereas Roach, while he hasn't ditched his core worries about governance or China, has definitely updated his view based on an unexpected outcome of the U.S.-China fight, companies choosing Hong Kong over the U.S. for listings. That immediate macro force is driving his revised market outlook.
They even touch on the same point, Hong Kong, as a capital-raising hub, but with different emphasis. Webb says HKEX and the government should do more to diversify beyond China.
Well, Roach is pointing out that Hong Kong is already benefiting because it's the preferred place for Chinese and Asian firms avoiding the U.S. market, even if it is mainly those mainland-linked firms.
So that's the real aha moment, maybe.
Right.
Roach's positive market revision is very specific to that trade war fallout. It doesn't mean his fundamental concerns about governance or the China economy link are gone. He stresses they're still there.
Exactly. And Webb's optimism is more structural and long-term. A belief in the city's basic DNA, and a hope for future political opening.
So why does understanding these different nuanced takes matter for you, our listener?
Well, I think it really shows that assessing a place like Hong Kong isn't simple. It's not just black or white, over or thriving.
Right. You have to weigh up all these complex factors together. External geopolitics, internal governance, the economic basics, the historical context.
And these insights also show how these big global tensions can cause unexpected ripples, unexpected shifts in markets and economies. things even experts didn't initially predict.
That idea of the US-China conflict actually boosting Hong Kong's IPO market, in a way, is a perfect example of that kind of counterintuitive outcome.
Definitely. So for anyone trying to get a real handle on regional finance or how geopolitics plays out on the ground, or just what makes major hubs like Hong Kong tick, digging into analyses like these from Webb and Roach gives you a much richer picture than the quick headlines.
Okay, so let's wrap up this deep dive. We have Stephen Roach, who once declared Hong Kong over, now acknowledging an unexpected market benefit stemming directly from US-China friction, even while his deep concerns about governance and the China link remain firmly in place.
And then you have David Webb facing his own personal challenges, but still deeply engaged, acknowledging Hong Kong's current problems, but holding on to a fundamental belief in its resilience, rooted in its core economic freedoms, its history, and an optimistic view towards 2047.
It leaves us with a pretty provocative thought to chew on, doesn't it? Hong Kong's recent market buoyancy seems tied to external conflict, to companies choosing it as a haven from US markets. Yet at the same time, it faces these significant internal challenges: governance, structural economic links that both Webb and Roach highlight.
So what does that complex mix truly mean for Hong Kong's long-term stability and its identity? Is its future success going to depend more on skillfully navigating these global rivalries? Or is it more about tackling those fundamental internal issues? Or maybe, somehow, both?
Something for you to consider. Thanks for bringing these fascinating sources to us for this deep dive. It's a powerful reminder that expert views can evolve, and digging into those shifts often reveals the complex forces really shaping our world.